All right. Hello, everybody. Welcome back to another episode of the Market Close. It is Friday. It is officially Friday, February 6th. Thank you, everybody, for being here. Folks, we got a little bit of green. Just a little bit, but we got some of it. Robin Hoodie, a much-needed day after a pretty aggressive week. We are at 82.78. That is up 14% on the day. Rocket Lab up 9% on the day. Tesla up 4%. Bitcoin holding well above 70,000. Almost got to 71. Actually, it did touch 71.3 for a little bit. Not too bad. Basically a $10,000 candle since last night when it was at 60,000. SoFi is up 6%. MicroStrategy is up 25. Walmart's up 3. The S&P 500 is at 691. That's up 2% on the day. 2% of the S&P is not a small amount. We basically lost 3% over the past couple of days. So the fact that we're getting a majority of that back in one session is very, very nice to see. Salesforce up a little bit. AMD up 8.3%. NVIDIA. I actually saw NVIDIA last time was 184. I didn't even realize we passed 186. 186.32. That's up 8.4% on the day. This is about a $200 billion move in market cap. Again, it just feels like a pretty nice day after the past couple weeks, past couple days, which have not been that good. Enphase is up 5%. Nebius up 16%. Iren up 4%. Even Grab getting a nice little 4% move right there. United Health up 3%. TSM up 5%. ASML up 5%. Microsoft back above 400. It's not a horrible day. It really is not a horrible day. And I think it was one of those days that we all kind of needed because obviously it's been pretty rough over the past couple of days, emotionally, mentally, physically dealing with the volatility of the decline. And over the past couple of days, as tough as it's been, I think the bigger thing that all of us have come to the conclusion for is that there's not really some big fundamental reason we can point to, which is why maybe it's not worth selling into the panic. Maybe it's okay to delever. Maybe it's okay to not take too much risk with, money that's not yours in the context of margin, but holding on tight to some of these names has paid off. Buying the dip has paid off, and you're seeing some of that momentum come in today. I mean, yeah, Iren getting to freaking $30 yesterday on earnings. Like, it could have had a bad earnings, but to go from 45 to 30 just did not make a lot of sense. And I think that's the case across a lot of these names, which is why you're seeing some of that momentum right here. On the heat map, we're also seeing some good momentum across every sector. Really, financials, healthcares, and utilities have been doing really well, and you're starting to see the excitement there. The only real names that are red today, quite frankly, Amazon, Google, and Meta. Verizon and T-Mobile a little red, but you take a look at the heat map. I mean, in the morning, I think a lot of us were skeptical, like, hey, can we trust it? Can we not? 2% on the S&P is not a small amount. I mean, especially in one trading session. So that definitely makes me feel like, I don't know if yesterday was the bottom of this whole temper tantrum we were dealing with, but it definitely feels more like the bottom than not when you see this type of ferocious move to the upside. And by the way, there was really no reason why we got the big move today outside of potentially the market being the most oversold that it has been, at least on the NASDAQ 100 stocks in the past couple of years. I mean, Trump didn't tweet anything. It's not like we had some major macro piece of news. You didn't have CPI. You didn't have any crazy jobs data. Robinhood going for 83 as we get into the close. Nothing crazy happened. It was just a reaction to the overreaction yesterday, which is flipped to the upside, which is actually really nice to see. Now, I bought 3 stocks today. Let me know in the chat what people bought. I bought 3 stocks today. 2 I added to. 1 is a new position. We need a bell for a new position. We need like an intro or like a little jingle for a new position. But I added to 3 positions today. Number 1, I had to. Amazon, obviously. This was stupid. I think I got it at 207. This was dumb. Went through the numbers again. Yes, they're probably going to have negative free cash flow, but I just don't think this was warranted. The fact that Amazon didn't recover with the rest of the market seemed to be a better opportunity to me. So I added to the Amazon bag. It's the lowest I've got on Amazon. My lowest was 215. It was 212 to 215 back in September. So this is the lowest I've been able to pick up Amazon. So Amazon was the first one. Number 2 was Meta. Meta did an entire round trip from earnings. And at some point I was like, okay, if the market's going to, really, I was talking about this morning, but I went through Meta's numbers again, 33% revenue growth. There's no other big tech company outside of NVIDIA that's guiding for that. Not to mention Jensen on CNBC today, which we'll listen to him talk, said that Meta is the only company, or he said they are the best company that's showing how to use AI. It was a real good endorsement he gave of Meta. And, a lot of us know that if you're growing 33% and you're spending as much CapEx, even if it's just advertising, it is Meta that's showing that they can really generate that revenue growth. So I thought that was pretty interesting. Bought some Meta. And then the final one, which is the new one, which I've been in and out of a few times over the past year. And this time I think I'm finally going to stay in it and not leave, because I don't think it deserves to see me leave. Also, I think it got pretty damn cheap based on the decline. Is AMD. We're in, baby. We are in. $45 decline after beating EPS by 16%. I just didn't think it was warranted. And NVIDIA, I have NVIDIA. I love NVIDIA. I've been buying NVIDIA since $100. AMD, I've been in and out of. I don't know, dude. Maybe it's a little bit of a vibes investment as well, but I just don't think that makes sense for it to be down the amount it was down. Also, seeing NVIDIA get closer to 190 here and start to have a real recovery, I don't think AMD is going to be stuck in this 205 to 208 range. I think we get back to 220, 230 as we get a proper recovery. Maybe not today, maybe not tomorrow, maybe not next month, but I think by the end of the year, the stock's not going to be $200. And so AMD, we're in. I'm not going to sell it this time. I think I've been in and out of this at least 4 or 5 times over the past year. In fact, I remember I got out right before they announced the OpenAI thing, and I missed out on a big move right there. So I'm staying in AMD, and yeah, that is the new position to the portfolio. So I was also thinking of buying Broadcom over AMD, but you look at the multiples, you look at where AMD is trading after the earnings. Broadcom, I don't know their earnings yet. I'm sure they'll be fine, but just given I had the data of AMD, bought a little bit of AMD. So put in the chat, what did we buy? What did we sell? What are we doing here? And how did you think of this? Obviously, Amazon and Meta were still down on the day. AMD, I guess you could say, bought into strength to an extent, given it was up today, but obviously it's still been decimated this week. Meta and Amazon, I kind of just bought into the weakness. I don't know. It didn't make sense for the entire market to be green and for those two to be red, especially given the earnings they had, especially Meta's revenue guidance. That's what kind of pulled the trigger for me. CoreWeave, 19% on the day. That was a big one. TSM, that was up 5% on the day. I see a lot of people saying they bought some Microsoft. I don't hate that either. Microsoft right there at 401.54. That is also green. Palantir did get to 135, 135.93. This one got to 125 last night. This one getting a nice little rebound. D-Wave, that's up 20% on the day. T1 up 13% on the day. VG, that's up 6.7%. I mean, realistically, there's not many sectors or names that are red. Obviously, Verizon's red because when growth goes up, value goes down, and Verizon's taking a bit of a hit. But Verizon's had a nice 20% move over the past couple of weeks. So, I mean, today was just one of those days where the market gave us a little bit of a breather, and hopefully that lasts as we get into the end of February, and we have a couple more earnings to get into February to deal with. But overall, it didn't seem like it was a whole to pick up some of these names. Let's hear from Jensen. He was live just a while ago, and this is what he had to say about the state of the AI markets.
You sit back and think to yourself, that's completely justified based on what you see?
It is appropriate and sustainable. And the reason for that is because all of these companies' cash flows are going to start rising. People are comparing it to cash flows. One of those numbers are wrong. It's just the cash flow is wrong. We are addressing the largest software opportunity in history. For the very first time, software is not just a tool. A tool is like Excel. Now software uses tools. So these AIs use Excel. And so I think the opportunity for this new era of software is incredible. And we're seeing it already moving the earnings of Meta. Nobody uses AI better than Meta. And so if you look at the way that they're using AI went from a classical recommender system running on CPUs to now a generative AI agentic system that is making recommendations. Everything from the way social media works and the way they recommend ads and help advertisers create content has fundamentally been changed. And their earnings show it. And that's the reason why they're investing so hard. They see just a much larger future potential for it. And not just one company. This is going to affect AWS's shopping and the way they recommend goods. This is going to affect how Microsoft's enterprise software works. Every single company sees the same inflection point, and that's why everybody's leaning in so hard.
I feel like
we'll get back to this clip after the bell, but I mean, Jensen went on and he basically said, hey, this whole software thing that's going on that everyone's afraid about, or the fear of where the cash flows are coming from all these big tech companies. His argument was we are in a fundamentally different paradigm that is going to exponentially increase all the key metrics that investors care about, like free cash flow. But you have to give it time for the CapEx build out. And when he was asked about if we're spending too much on CapEx, his answer was unequivocally no. Obviously, it's in his best interest to say that, but at its core, he's like, this is not dark fiber in the year 2000. There's no dark GPUs. We are using as many GPUs as we can. And to his point, GPUs that were sold 6 years ago, if you look at the rental prices, are actually increased in value because there's so much demand for this compute that people are willing to pay more. Reddit, by the way, I don't know why this is down 7%. They had a great earnings. I don't know why Reddit is down 7% today. So this one, not sure why. Amazon's still down 5%, Meta down about 1.2%, but yeah, very weird that. I mean, I saw Reddit got some price target decreases, so did Amazon as well, but that one got hit pretty bad. BM&R, nice day, 17%. ETH back above 2,000. Bitcoin is the real story. This was incredible that Bitcoin went from 60 to 70, and hopefully Bitcoin bottomed at 60. I mean, I don't know. Put in the chat. Do you think it bottomed at 60? Because if it did bottom at 60, then if Bitcoin is a leading indicator for a little bit more of the risk on sentiment in the overall tech stock ecosystem, I don't think we're seeing Hood go back to $70 again. I really don't. Like, I feel like Hood bottomed. And I hate saying that, but like if Bitcoin bottomed, I feel like Hood, I don't think we have to get back to that crazy level where we erased that much of market cap. And same thing for a lot of these names. I mean, Nebius was $68 yesterday. Like Nvidia was pushing below 170. Obviously it could happen. And maybe I'm just saying this because it's a green day and it feels good, but man, some of those levels were getting a bit ridiculous. And I don't know if we have to get back there unless we have some big boogeyman bear case, which given I don't think there was a big boogeyman bear case over the past couple of days, it just felt more like a temper tantrum. But maybe that is the extent of the pain, at least in the short term. S&P 500 right there, 2% on the day, a hell of a reversal. We were 9 points away from 7,000, folks. 9 points away. Everyone is saying you have to use the old bell. So if I don't use the old bell to close out the market and we tank, you guys are all going to blame me. Is that what everyone is saying? Is that really what everyone is saying? Costco 1,000. Costco 1,000, baby. Steve's going to love that. Steve will be on the show in a little bit. Applied Digital 25%. By the way, we're going to be dropping the podcast at the end of this show. So I'm excited for all of you guys to see it. I think it'll be fun. And it'll be dropped in the next hour for everyone to get access to it. All right, here we go. Friday, February 6th, 4 p.m. A much needed little bit of a breather for the markets after a rough couple of days. Thank you, everybody, for being here. The stock market is now closed with the old bell. To ring it a little bit longer for the green day, a little bit longer. There you go. We are done for today. Will the podcast be on Spotify? That's a good question. I didn't even think of Spotify. So yes, I'll actually post it on Spotify this weekend. So today it'll be out on YouTube. Tomorrow it'll be on Spotify. And I'll link it for everyone so they can check it out over the weekend. All right, there you go, folks. S&P 690.64. We ended up 2% on the day. We got all the way up to 692. Not too bad. 690.64. Palantir 135.90. That stock was 125 yesterday. Robinhood 82.82. 14% on the day. That stock got to $69 yesterday. Meta red on the day, down about 1.3%. Amazon still red on the day, down 5%. Amazon was below 200 at one point. Iran, nice little recovery, 5% up on the day. Tesla 411. That was at 395 last night. Rocket Lab got to $61 yesterday. It's at 72, up 9% on the day. Not too bad. Now, SoFi, good recovery from 18 to 20.8. I thought SoFi would make a little bit bigger of a move above 21. It wasn't able to get that momentum, but at least you're not below $20 anymore. $20.86 for SoFi. MicroStrategy, I mean, just shout out to anyone who bought this yesterday. It was probably really scary to buy it, but if you bought anything super crypto related, like MSTR or BMNR, you got rewarded for that today. That's up 26%. Bitcoin is still below MSTR's purchase price, but at least it's getting close to the purchase price, and we are holding that 70,000 level on the day. Broadcom 332, that was up 7% as well. Estee Lauder, that was up 2.9%. Elf, that was up 6.7%. They had a good earnings. D-Wave was up 20% on the day. Rigetti was up 18%. T1 Energy up 13%. Baba, that was up 3%. Enphase had a good day. That was up 5.3%. Costco passed $1,000. NVIDIA 171 to 185. A hell of a recovery for NVIDIA, and really, really important for the markets that the most important company on the planet, the largest part of the S&P 500, NVIDIA, got to move higher. It would be really weird if NVIDIA didn't recover, but the market did. So it's nice to see that. We are also not in fear anymore. We are back to neutral. We had fear for about a day. Now we are back to neutral, which is good enough to see. So here's the question for everybody as we get into all the headlines that we have. Here is the question. I'll put it in the chat for a poll. And again, let me know what you bought over the past couple of days or what you sold or just any portfolio strategy that you took. Let's make this poll right here in the chat. Did we bottom? That is the question. Did we bottom? Now, it's not bottom for the year. Just in the short term, do we think we're going back to like 670 on the S&P, which would be reversing the move that we had today and would actually put in a legit low from the 672 lows we had yesterday? Or is, at least for the next month, let's say for the next month, let's put that on the time frame, we're going to be okay. What do we think? Was that the temper tantrum the market needed to flush out a lot of stuff, get rid of the margin in the system? I mean, Hood is still 82. It was at 120 during the beginning of the year, right? So, I mean, Palantir was at 180. It's at 135. It's SoFi is at 20. It was at 27 in January. So AMD was at 240. It's at 208. It's not like we have recovered any meaningful amount of the market cap that all these companies have lost. But does AMD need to go to 190 again? Right? Like, does Amazon need to go to 195? Does Rocket Lab need to go 61? Does SoFi need to go to 18? Do we put in at least a short-term intra-bottom across the market? That is my question for everyone here. Tobias says, I bought Amazon, Palantir, Hood. I sold DSS and ASTS. ASTS actually had a good recovery today. Got hit yesterday. But yeah, that was up 9% back above $100 today. Dove Bear said I bought Boeing, Tesla, Rocket Lab, Palantir, Red Cat, Amazon, XLF, financials. I like those as well. AIRR. First Trust RBA. Okay, so that was up 4% on the day. Bought Shop and Amazon. I got close to buying Shop today. I did not pull the trigger on that. But Shop really didn't have that big of a day. 112.05 as that was also slightly. Oh, I did buy some SoFi. I did buy a little bit of SoFi. I actually bought it like right before the bell. 2075. 2075. Let me confirm that. 2075. Yeah, 2075 on SoFi. So I did buy a little bit of SoFi, but that was it. Robinhood right there, 83.20 after hours. Alex said I bought Adobe and CRM. Amcor, that one also had a good day as well. Amcor 49.36, 11.5%. We'll talk about Hood earnings. I have some thoughts on that. I started looking into some of their numbers today as well, and we'll go deeper into that. Reddit, yeah, again, I don't know why Reddit's actually kind of interesting here. I'm not going to lie. I remember I bought this thing at 115 last year, ended up selling it at 120, so I didn't make too much, but it went to almost 300. Now it's back at 139. I did my deep dive when it was at 230, and my biggest concern in the deep dive was the valuation was too much. I mean, it's not 230 anymore. So maybe this one looks a little bit more exciting. Bought Ondas, ONDS. That was a great day, 14%. I mean, pretty much everything across the board had a lot of momentum. IWM 265, that was also up about 4% on the day. That massively outperformed the S&P, almost double. So again, the small caps continue to be in favor, even though we are out of the month of January where small caps tend to be in favor. Then Microsoft, 2% is nice, got above 390, but still significantly lower than where it was at the beginning of the year. All right. Cool stuff. We got a lot of headlines. Let's get into it. Couple different people to hear from. Also some stats for you guys. Amazon shares post their 12% weekly decline, the most since 2022. So we haven't had a decline on Amazon at this level since 2022 in a week. Part of the reason why I bought Amazon today. We're going to listen to Jensen a little bit more. Also, the Dow Jones, for anyone who cares, hit 50,000 for the first time in history. Trump was pretty happy about that. So your Dow Jones Industrial Average, it's kind of crazy, right? Yesterday, it's like the sky was falling. Today, the Dow Jones new high, 50,000. So Trump did tweet that he was happy about that. Let's hear from Tom Lee and get some of his thoughts on this rebound that we've seen.
To speak with not only for Dow 50K and the jump back in tech, but also as the chairman of Bitmine. Tom, I know you're watching what's taking place in crypto. We're talking about a 7-month low for the stock. A Bitmine, the Ethereum paper losses, $8 billion. Is this in jeopardy of going into a pretty dark place?
Hi, Scott. Thanks for having me. Bitmine is designed to be a vehicle that tracks Ethereum prices, but on the upswing, because we're adding Ethereum, will outperform. So Ethereum's in a drawdown. Bitmine's going to be in this drawdown spot. Bitmine has no leverage. It has roughly 4.3 million Ethereum that earns 3% annually. And we have 600 million cash earning about 4% in money markets. So the company is making about $1 million a day. So there is no risk, no need for the company to actually raise money because it's debt free and actually generates about 360 million a year in net income. I think.
All right, we'll go back to Tom Lee in a second. 50% of you say yes, we've bottomed. The other 48% say no. So it's basically 50-50. So it's not definitive of everyone thinking we've bottomed. Still some mixed feelings here. Let's go back to Jensen and then we'll get back to Tom in a bit.
It's the point that it's an interesting point. It sort of turns the way you need to think about these businesses on its head. That if you're just fixated on the spending side, as you were talking earlier about, they're spending such a huge portion of their free cash flow, you're kind of missing the story. The market needs to get its arms around that. You as well as an investor?
Yes. If you turn the clock back, Scott, to 2008, 2009, right, Amazon could have taken their profits and sent them back to us by way of dividends. Instead, Jeff Bezos said, I'm going to invest in this thing called AWS. Think of it as digging a gold mine. You have to spend a lot of money to dig the gold mine before you get the gold out. These guys are digging the biggest gold mine in the history of software, right? But it costs something up front. Now, the question is, do you believe Andy Jassy and Mark Zuckerberg and Sundar and Jensen that this opportunity is that big? Or do you have a special insight that causes you to understand there's no gold in the bottom of the gold mine? As an investor, I'll just tell you this. I want my personal net worth. I want my fund's net worth levered against AI because all human progress is going to be derived from machines helping humans think and augment human thinking. And so whether it's owning NVIDIA, which is our largest public position, or whether it's Anthropic or OpenAI, all of these companies are going to be tremendous beneficiaries, and they're doing it at scale. There are increasing advantages to scale, right? And so I think it's hard for people to get their arms around now, just like it was in 2008 and 2009. But thank God Jeff Bezos did that. Now it's a $140 billion business generating $30 billion a year in annual profits that people criticized him for investing in back then.
It's incredible that OpenAI and Anthropic are $20 billion run rate companies, generating profitable revenues and accelerating growth all at the same time.
Right.
These are extraordinary things, and it makes perfect sense from where we sit.
How can we be so certain that the amount of compute we think we'll need and that we continue to hear from CEOs like you that we will need is actually going to come to fruition? Isn't it inevitable that we're going to, at some point, overdo it, but we're not going to know that until it's too late?
It's not like roads. Roads, once you lay it down, it stays fairly useful for a long time. The way computers work is you build up the infrastructure, but then you start replacing it 5, 6, 7 years later. And so I think it's going to take us some 7 years, 8 years to build up to the level that we have to sustain. And after that, we're going to be refreshing and slightly growing. And so we've got several years of build out ahead of us. The important thing is this. You have to go back to first principles. Computing has fundamentally changed. It used to be pre-recorded. Excel and PowerPoint and all these tools and all the software is pre-compiled. They compiled it and they send it to us. The way software works now, because it's contextually aware, every single time you use it, it takes into consideration the context, who you are, what you're asking about, what's happening to the world, what other information you give it, the context. And every single context is different and every single response is different. So from now on, every single pixel, every single beep of a sound, every video that comes out of the computer is generated in real time. And that's the reason why we need computers to operate software at such a large scale going forward. And all these.
I mean, again, when Jensen says stuff like this on a green day, it does add to the level of, oh yeah, of course, like AI is real because you're seeing the stocks go in the right direction. But over the past couple of days, again, it's been weird because the stocks that are supposedly part of this AI revolution have not been going in the right direction. The companies that supposedly are going to be commoditized by AI have been getting decimated, and they haven't fully really recovered yet. So just everything, and then fintech got hit, crypto got hit, everything getting hit. It makes you start to really think like, what exactly is going on in the market? How does the market not understand exactly what's playing out? And maybe it really just was a temper tantrum. Maybe that was the case, as you're seeing in video right here. Massive move today, 8% up, which is pretty nice to see. Hassett just said we're going to see GDP down a bit from 5% to 4.5% for the year, but it's much more bullish than 3% growth on the expectations. I mean, that's another reason it's really hard to expect a massive recession or some decline in asset prices to such an extent if we're pushing out 5% GDP. Gold and silver ended up having a good day as well, as we can see right here. SLV was green on the day, not massive, but SLV, nice little 5% move right there. And then GLD, that was up 3% as well. So we had gold and silver also participate. I mean, everything participated. Commodities, crypto, tech stocks, utilities, certain individual names got hit pretty bad, like a Reddit. But outside of that, Intel was up 5% of the day. Google and Meta were down. I don't know why Google and Meta were down. I really do. Maybe the CapEx bucket of stocks that are spending too much, they got lumped in with Amazon. And, you know, all three of them have said they're going to be spending a lot more CapEx than expected. But that CapEx is important, and it's going to fuel a lot of GDP, which is not the worst thing in the world. Here's finishing up with what Tom Lee was saying.
Crypto sentiment is rock bottom because it has been a terrible drawdown. I mean, just the past 10 days, Ethereum's down 40%. And that's triggered, I think, a lot of concerns about whether crypto is even viable. But, you know, all of those statements that I just heard from just a minute ago, I heard the same thing in November 2022 after FTX. And that's the reality, that crypto is sort of characterized by hypervolatility and big drawdowns. I mean, just in the last 8 years, Ethereum's had 7 drawdowns of 60% or more. The good news is 7 of those were all V-shaped recoveries. So we had a waterfall decline. If crypto's bottoming now, which it kind of looks like it is, especially given MicroStrategy's 25% move, the recoveries are V-shaped. So we recover as quickly as we've fallen.
Just want to follow up on that. Where you suggest there's no risk to the company, is that assumption that Ethereum has stopped going down, that this is a bottom? If there is what some have predicted to be a coming quote unquote death spiral for certain cryptocurrencies, if the situation with Ethereum gets worse, what happens here?
Well, yeah, I mean, it's a fair question. I think we can look at metrics. For instance, if you look at the number of active addresses on Ethereum, it's up 117% versus a year ago. In fact, in just the last 3 months, that's actually gone up parabolically. As you know, coming out of Davos, what was the big story around what Wall Street plans to do? It's tokenization, which is moving a lot of their financial infrastructure onto the blockchain, Scott. That's not going to change just because crypto prices have fallen. But what is the blockchain that is evident, you know, listed, named by whether it's UBS, Standard Chartered, or Fidelity, where they're tokenizing products? It's on Ethereum. So Ethereum is not in a death spiral because the utility is going up. The price, of course, has been awful. Unfortunately, you know, crypto prices are volatile. It's not like earnings estimates change for Ethereum. In fact, network usage is up 80% in just the last 6 months.
I mean, that is a fair point. At the end of the day, the price of a crypto asset like Ethereum is not necessarily associated with all of its usage. But regardless, you know, it's not nice to see the price get hit as badly as it has gotten it. So, I mean, you got Tom basically saying that was the bottom. Sean Farrell of Fundstrat, which is their crypto guy, literally said 1,800 would be the bottom. I think we tested at 1,790 last night. It is crazy though, right? Because, you know, it's only February 6th. Like, did we really hit the bottom on February 6th across the entire market? At least last year it happened towards the end of April, and then we started recovering. Like, sometimes you need February last year is when the process of going to eventually see that bottom started. literally, it was like this week or the week after the first week of February. And then we had that 2-month decline. So I understand the skepticism by a lot of people of saying there's no way we've completely bottomed from whatever downside we've had, because bottoming is a process. But the S&P is now flat for the week. I mean, all the shit we went through, and for the week, you didn't even get a dip. I mean, you did, but like when you look at it 5 days later, it's almost like if you had slept, nothing would have happened. And so it is quite incredible to see the level of velocity that this market came back with. Obviously, yes, Bitcoin has still been hit pretty bad. I mean, Bitcoin was 85,000 last week. Now it's at 70,000. I get it, but at least it's not getting below 60,000. And if that was the bottom, it doesn't have to go to 90,000 anytime soon, but it doesn't have to retest those 60,000 lows. By the way, Bill Clinton says he's ready to testify about Epstein on February 27th publicly. So that will be, I think a lot of people will be watching that one. I will not sit idly as they use me as a prop in a closed-door kangaroo court by a Republican Party running scared. If they want answers, let's stop the games and do this the right way in a public hearing where the American people can see themselves for what this is really about. All right. I guess we're going to see what Bill Clinton says about that over the coming weeks. We know he's so honest under oath. Oh, my gosh. All right, let's finish up with Jensen, and then we'll keep going with some of the other headlines that we have today as well.
These tokens are what we call intelligence. And for the first time, we're generating something of tremendous value, intelligence as numbers. And these things, as I mentioned earlier, this last year, we went through an inflection point because these tokens became profitable. And so we just have to make more of it.
Can you blame, in some ways, investors who have PTSD from the last time tech went through this revolution and evolution at the same time for seeing certain things that remind them of then and worry that they'll happen again?
It's good to always reflect on history. History informs us, but history doesn't repeat. And so you have to take into consideration what's actually happening. Always go back to first principles and think about what is actually happening. Right now, the fundamental difference, a huge difference between now and some things that happened in the past with the internet, there was a ton of dark fiber. There are no dark GPUs. 100% of the GPUs are rented. In fact, GPUs that we sold 6 years ago, the prices are going up. It's not like it's antique. I mean, it's incredible. It's like a fine wine. The demand is so high that GPUs I sold 6 years ago are going up in price. And so I think the demand is just incredibly high for the reasons that I just said. One, we went through an inflection point. AI has become useful and very, very capable. Two, the adoption of it is incredibly high. And three, because these AIs are thinking, the amount of computation it needs is great. And so to the extent that people continue to pay for the AI with, and the AI companies are able to generate a profit from that, they're going to keep on doubling.
All right, so Jensen once again making the same argument around AI, and he does not think that it's going to be slowing down anytime soon. He also said that if Anthropic and OpenAI had 2x access to the compute they have, they would be doubling their revenues as well, which, I mean, maybe that's the case, but the broader argument is that he feels that this AI thesis is literally just getting started. If that's the case, this is a bull market, man. I don't know how we have 600 billion of CapEx and new additions of GPUs every single year. Vera Rubin, again, just an incredible feat of technology, demand being through the roof, and we end up having a bear market. Like, it does not make sense logically, especially when the biggest companies in the world are valued at less than 25 times forward earnings. Like, you can't, it feels like you're going crazy trying to think how that turns into a bear market. And maybe it does. Obviously anything's possible, but it doesn't feel like that should be the case. Take a look at a couple of these macro charts here. I thought this was also important. Total volume for put and call ratios spiked yesterday on the S&P 500. The prior times that you see this type of a spike with put and call ratio tends to be a bottom. As you can see, the last one was April of 2025. You can see that spike right there. And that's obviously when we bottomed with Liberation Day. So, I mean, that is another sort of at least options metric on the idea of us getting close to a bottom. And maybe that was exactly why we saw some of the momentum we saw today, that people just flipped a bit more bullish. This I thought was also really important. Take a look at this. GPU availability is falling across the world. This is exactly what Jensen was talking about. B200 Grace Blackwell GPU's availability is making a new low. This is from 14 Research. Less availability obviously is bullish for demand because more and more people want to get access on to these GPUs. So, I mean, the sort of fundamental AI story is working in the right favor. And then you're seeing things like put call ratio spike, which is important. Also the VIX, did we have a 10% move down? We had an 18% move down on the VIX. It's another reason we had such a nice recovery on the S&P 500. But that's good. Volatility died down today. And you need volatility to die down to have the markets continue to go as high as they're going. Across the world, we're seeing more momentum with retail. Look at this from Bloomberg. China retail investors rushed to open new accounts in January. The number of new individual investors accounts in China jumped 88% month over month to 4.9 million, the highest since October 2024. The number of new margin trading accounts surged plus 30% month over month to 190,000. Retail participation in Chinese markets is skyrocketing with 390 billion of margin that is being deployed inside of Chinese retail accounts. Now, I think the good thing about the last couple of days, if there is any bright side to look at, is that I think a lot of retail and probably hedge funds delevered. And that's important, right? Because at the end of the day, the leverage in the system, whether it's levered ETFs or just margin in general, is probably what led to some of the excess selling that we saw. And, we probably needed people to get off some of the leverage and have a little bit more of a healthier approach to the market, at least in the short term, for there to not be that much volatility. Question is, will that last? I thought this chart was really interesting by Goldman Sachs as well. Institutional investors aggressively unloaded U.S. equities last week. Hedge funds sold U.S. single stocks at the fastest rate since October on Wednesday, posting their second consecutive daily net sale. This was driven by short sales and to a lesser extent by liquidating long positions. Obviously, the hedge funds also have been in a little bit of a pickle when it comes to these margin calls. This also marks the fifth day of net outflows over the last 6 days. 5 out of 11 sectors experienced liquidation, led by information technology, industrials, and materials. Semiconductors, communication, and tech hardware faced the heaviest pressure of selling. Now, having said that, today you had a 2% move on the S&P 500 to the upside. So if those same hedge funds that sold at the highest level since October, that sold on Wednesday, didn't really participate in the rally that we saw today, which we'll find out next week based on more data, this could have been a retail-driven rally today. Not saying retail caused the entire move on the S&P today. Obviously, that's really hard for retail to do. But, I mean, it could have been a lot of retail stepping in and saying, okay, cool, we bottomed. Yesterday was pain. We're back in. And we're putting in some more money. So it was nice to see, and hopefully that can continue as we get into the end of the month. Does that make today's move just a short covering? I mean, possibly it could have made today a bit more of a short covering day to an extent, which is, again, why I think, people should be a bit skeptical of this move that we saw. I think Monday is going to give us some good answers. Like Monday, do we see this completely reversed? Do we see Bitcoin tank over the weekend? Do we see the companies that have earnings next week, which, by the way, we have a lot of freaking earnings next week. We also had a lot of options today on Friday. I mean, next week we have Spotify, Robinhood, Cloudflare, Lyft, McDonald's, Cisco, Coinbase, Airbnb, DraftKings, Rivian, Shopify, T-Mobile, Unity, BP, Ferrari, Oscar, Dutch Bros, Twilio, Pinterest, just a ton of different names. Nebius is next week. None of the big tech companies, because they already reported. NVIDIA is going to be, I believe, February 27th. NVIDIA is February 25th. But still, a decent chunk of earnings. And if those companies can give earnings in a relatively healthier environment where the market's not that upset, then maybe that can continue to prop things up and keep it going. Trump just tweeted. What did he say? I just approved $60 million for the great state of Tennessee, which I won 3 times for the severe winter storm they are recovering from. Incredible people that I know will rebuild. President DJT. I didn't know Tennessee was dealing with a winter storm this weekend. I know the East Coast dealt with it the most 2 weeks ago. Oh, yeah, it's pretty bad. Multiple emergency warnings and advisories. Is anyone in Tennessee? Is anyone in Tennessee in the chat? I feel like we've had a few people from Tennessee. You know, Tennessee is my favorite state. It's absolutely my favorite state. Because, you know, it's always nice to go up to the girl at the bar and ask if she's from Tennessee. Because, you get to follow up with because you're the only 10 I see. Okay, back to the markets. So, what else happened today? Let's see. Ed Yardeni, he has some things to say about how the Dow Jones has approached 50,000. That was so cringe. That was so bad.
Great. We're thrilled. Glad to hear it.
Nobody's talking about a recession, and the only question is how big a boom are we going to have from all this?
Right.
Yeah, the Atlanta, what is it? The Atlanta GDP now, I know it fluctuates, Ed, but it's showing about a 5% GDP growth. And I think you're touching on a really important topic because we like to keep things simple here. We say, okay, Meta or Amazon is spending $1 billion on a data center. What we don't talk about is that there's probably 500 to 1,000 vendors, different companies inside of every data center, whether it's the steel company or the concrete maker or the computer company or the wiring, the company makes the wires, that trickles down across the board. It's a huge stimulus to the economy.
Well, the economy, first of all, has been amazingly resilient since the pandemic. I mean, since the pandemic, we had a 2-month recession, and it was engineered by the government. They shut everybody down. They locked us up. Ever since then, it's just been up, and away. I mean, think about everything that's happened. We've had the pandemic. Then we had the supply chain disruptions. Inflation soared. The Fed raised interest rates. We had tariffs. And here we are, all-time record high in the markets. And the economy absolutely booming at an all-time record high.
You have to think a couple of things. I mean, one, falling interest rates now are helping ChatGPT, AI.
It helps, sure.
You guys called this, a few months ago and said, look, the AI, while this investment is great for the broader economy, the Mag 7 are turning on each other. I love how you put it. So they're no longer little kingdoms with their protected moats, each in their own lane.
Game of Thrones.
Game of Thrones.
Yeah.
So do you have an opinion on who emerges triumphant, or is the point that we have to
I think that's what's so exciting about it. It's like for one day, it seems like one of the hyperscalers has an advantage or one of the LLM model makers. And now, OpenAI comes back with, well, we'll call your shot here and do better than you. So there's a lot of that going on.
Here's what,
again, the Dow Jones names, those are, let me pull up the companies in the Dow Jones. Those have been the most resilient, quite frankly, since this downturn that we've seen. And once we get a little bit of a move upward, NVIDIA is in the Dow Jones, that really tends to get this index to move higher. So, I mean, a lot of these names were a form of safety, which is what Ed Yardeni's been talking about in the Dow Jones. You have Sherwin-Williams, Coke, Visa, Verizon, Boeing, Caterpillar, Merck, Nike. Nike was up this week, didn't really have too much of a drawdown. UNH obviously is the one that's been the worst. Disney, Chevron, NVIDIA, Procter & Gamble. And a lot of these names have held on. And this is what we asked a couple of days ago. Like, do you sell your NVIDIA for Verizon just because NVIDIA takes a 10% hit? It's like, well, NVIDIA's back up 10%, and selling it for Verizon, although it would have felt like maybe something that feels good when things are bad, the market, once again, this is NVIDIA's market. This is the AI market. This is the market that is rewarding growth. Which is why so let's talk about Robinhood. Robinhood's decline to me has been just unbelievable given the fact that they are going to grow. I went through their numbers today. They're going to put up some good numbers. Like, you can call them a crypto proxy all you want, but Vlad's going to put up some really good numbers when we get into earnings. And I don't think they're going to miss on earnings. The street's expecting them to do about $1.34 billion in revenue, 64 cents of EPS. At some point, their PE got to 30 with growth rates of potentially 40 to 50% this year. Even if they were to do 35%, that's a pretty damn good growth rate for where their PE was trading at. So look, they don't need to go back to 120 anytime soon, even though I think, if the broader market continues the way it is, they should be able to get back there. But I really don't think they need to go back to $70. Like, next week, if Hood tanks after earnings, I don't think it would be a Hood thing. It would have to be something across the market just like completely went wrong for Hood to take a 15% decline for what? I mean, like there wouldn't really be a fundamental reason, I think. That would be creating the issue, unless Bitcoin got back down to 60,000. The problem with Hood isn't this quarter, but the next few quarters and years. Look, I'm not saying that Q2 is going to be amazing. I know their prediction markets revenue is not going to be the best. I know crypto is declining, but this is where you have to have trust in the fundamentals of the business. Like I really do trust Robin is going to be able to create new products and services inside of their ecosystem that will be able to expand the earnings of the business irrespective of what's happening in the market. I do think they'll be able to do that. And that is something where they will have the time to do that, but I don't think the stock needs to go to freaking $50 while they're in the process of doing that because those growth expectations still are already so strong and they can live up to it. So I think Hood's going to have a good earnings. I think Coinbase is going to have a pretty decent earnings. I'm looking at the chart for next week. Cloudflare should have an amazing earnings. AppLovin should absolutely demolish earnings. This stock also, let's see how they did today. They were back above 400, got to 350 yesterday. Stock's still down from 750. They're going to put up probably 70% growth. They're going to be fine. I mean, a lot of these names should do well. Now, DraftKings, I don't know. DraftKings is in a little bit of a different situation, but some of these growth stocks that have real big moats and catalysts behind them, I think they're going to be okay. White House says Trump signs proclamation on commercial fishing in the Atlantic. Okay. So some more proclamations on fishing. CoreWeave was up 20% today. I don't think we got any executive orders today from the White House. CoreWeave right there, $89.95. That stock fell to 71 yesterday as well. SaaS names, let's take a look at all these today. Again, most of them ended up pretty damn good. CrowdStrike was up 5%. Zscaler was down. Intuit was up 2. Twilio was up 5. GitLab was up 5. Palantir was up 4.5. Even Oracle, which Oracle's looking kind of interesting. Now, it's not that interesting because of all the debt they have, but 350 to 140. If they didn't have that much debt, I feel like this would be just a screaming buy. But then again, maybe it wouldn't get to 140 if they didn't have this much debt. Salesforce right there, that's up 1%. Atlassian was down about 4%. I mean, the software names still decimated, but at least they got some recovery. Snowflake was up 7% today. And then IGV was up a nice 3.5%. You had 220,000 calls that were bought yesterday on IGV, some of the highest volume we've seen on the software ETF in the past 5 years. Is the Super Bowl this weekend? Hold on. When is the Super Bowl? Is it this weekend? Oh, shit, it's Sunday. Oh, wow. That'll be big for the prediction markets. Definitely big for Hood. Oh, let's do a poll on that. Also, to my international friends, do you guys care about the American Super Bowl or no? Or is it like literally just an American thing? I forgot the Super Bowl was this weekend. 51% of you said we bottomed. 49% said no. Who will win the Super Bowl? Wow, none of you guys care. Seahawks or Patriots? I want the Patriots to win, but I think the Seahawks are going to just like crush them. We care about soccer. Damn, none of you guys care? Seeing no one say no. Oh, I forgot Bad Bunny is performing at the Super Bowl. Dude, you guys have seen the Bad Bunny meme, right? When he won the Grammy. That meme has been used in so many contexts. It's been a good meme. It's like him crying for winning the Grammy. He won the album of the year, I think. I got the Seahawks. I think the Seahawks will win. Name one Bad Bunny song. I can't. I feel like I should, dude. I feel like he's one of the biggest artists in the world. No, I can't. I really don't. I'm pretty sure I've heard a Bad Bunny song. But wow, okay. So I guess people don't care. All right. Well, that's fine. I kind of didn't even realize it, but that will be on Sunday. Did Tanner put out his interview yet? Did he put it out? No, it's not out yet. Tanner, when's this interview coming out? When are we going to see it? It's going to be a fun one. I think you guys will be excited for it. The one with Drake, I thought that was, oh yeah, that was on the latest. That was that was bad though. That song was horrible, bro. That was really bad. Did they retweet him? Hold on, let's see. Is it finally out? No, they didn't. They retweeted Tevis, but they're not saying who the guest is. So I can't say who the guest is. But a certain company did retweet Tevis. Company's name might be SoFi. So, yeah. 5 p.m.? Okay, cool. It'll be out at 5 p.m. It'll be out at 5 p.m. Super Bowl world champions. Josh Brown podcast will be out later today. Steve and I will talk about it. And speaking of Steve, look who just joined backstage. By the way, Mike, and thank you for the super chat. The old bell has mystical powers. I guess I have to use the old bell now to open and close the market. And Jared, thank you for becoming a channel member. Ladies and gentlemen, on a green Friday after a bloody week, have no fear, because the milkman is here. Steve, how are you?
What's going on?
How you doing?
You know, driving through the city, relaxing. Pretty happy right now.
Did you notice the equity markets today?
You know, I may have noticed something. I may have tweeted something. And these are the days you don't want to miss.
So I'm looking at your tweet right here. Right now, the Dow Jones is up 1,000 points. NASDAQ 458, S&P 100. What was the point of running scared this week? The market is still down, but not nearly as much before. Companies like NVIDIA are rallying, and the people who are running from the hills are missing it. So I guess you're pretty happy.
Look, it has nothing to do with being happy or not. It's just, if you are selling because you're scared or you're letting a narrative get the better of you, all this proves is nobody knows shit. And the markets can turn on a dime. Nothing changed from yesterday to today. Nothing. So all this proves is nobody knows when the markets are going to turn for better or worse. And if you try timing the markets, you could be caught flat-footed. And it's better to be in the markets than to try to time the markets.
How do you feel about the reversal we had today versus the decline we had over the past couple of days? I mean, obviously, you and a lot of us last night, we were talking about how it doesn't feel like there's anything fundamental. It feels like this is a temper tantrum. 2% reversal is pretty big on the S&P. We're very close to 7,000. Why do you think the decline happened and the reversal happened just as quick?
Look, I can't pinpoint exactly why. It's just a theory that crypto started going down. People were being degenerates and going on margin. They got stopped out of positions. They had to sell Bitcoin or equities to cover, which led to more forced selling in the equity market and people selling into weakness, which allowed the algorithms to get a hold of it. And then Amazon coming out with 200 billion over the top, which a lot of people, including myself, said they were going to come over the top of what Alphabet did, caught some people off guard, and the market just threw a temper tantrum all week. I mean, these things happen, but we always reverse. Whether it's sooner or later, they reverse.
Now, although the S&P has recovered pretty nicely, a lot of individual stocks have gotten hit still pretty bad. Do you think, well, I guess here's the bottom question. Do you think we bottomed yesterday?
I'm not going to come out and just say we bottomed because, look, we could go down on Monday or Tuesday. I think we are in the process of finding a bottom at these levels. And I don't think that companies like Coca-Cola or J&J or JP Morgan are necessarily worried about what's happening right now. And companies like Microsoft and Meta and Alphabet and Apple shouldn't be concerned, even though it's irrational. I just think that there's companies that have been overvalued that deserve to take a hit. And it was kind of a perfect storm with the crypto markets. And those are companies that, like, people aren't going on margin to buy freaking Microsoft. People are going on margin to buy high beta names, and they're getting caught. Nothing else makes sense.
This week kind of mirrors the silver trade, 30% move down. Yeah, almost exactly. I mean, last Friday, 30% silver moved down. Relatively strong recovery, even not to the all-time highs. And I think that's very similar to kind of what happened today over the past 2 days as well. Do you think that, so certain stocks that were still expensive, even after the decline over the past couple of days with the rebound today, are obviously still relatively expensive. Do you feel those names need to still be flushed out? Like, or do you think it's okay, it's enough pain if a stock
I think there's always going to be companies that are expensive. Maybe we get a little bit more of a flush out, but the companies that drive the markets are trading at great multiples. That's why when I showed the numbers last night, there's a lot of pain in individual stocks, but overall as an index, people who are index investors didn't feel a thing.
Yeah. No, I agree. And I think that's why the rally on NVIDIA today was so important. I mean, like, that stock is cheap on many conventional metrics.
Can we just say one thing about NVIDIA? Of all companies to sell off this week, NVIDIA is the one company that had no reason to. You could have made up a reason for everything else. But when you have the memory chip companies, when you have the disk companies for hard drives, when you have the large caps talking about the amount of capex they're going to spend, all roads lead back to NVIDIA. There was no reason for NVIDIA to sell off, and it went down to 172, approaching under 170. There was no reason for it. If anything, NVIDIA is going to shoot the moon this year on guidance.
Well, that's the other thing. If NVIDIA comes out and crushes the earnings, I think the entire sentiment of the past couple of days can change. And obviously the other companies crushed guidances and earnings as well, but they spent so much on CapEx. NVIDIA is the beneficiary of all that. So theoretically, if Amazon's getting punished for spending CapEx, NVIDIA should not be getting punished for receiving the CapEx. Like, there's no world in which that makes sense.
Exactly. Just because Amazon's going to go negative free cash flow for a year or two has nothing to do with NVIDIA. All it means for NVIDIA is they're generating more revenue at probably very similar margins to where they're at now, which means a lot more profitability. I mean, let's be honest here. Look up the numbers. I think Microsoft, the number's 162 billion of EBITDA for the trailing 12. That's 3.1 billion a week in EBITDA, and we're selling off Microsoft. You're selling off a company that's doing over 3 billion in EBITDA a week. There's something wrong here with the way people look at the stock market.
Yeah, and the variety of theories over the past couple of days, whether it was Kevin Warsh or this or that, I mean, like, I don't know. A lot of those theories seem to not be particularly relevant now. Obviously, if we went down today, you would start getting more of those theories. But what you said, which is CapEx, revenue, profitable revenue, overall growth, feels like that is going to be the defining thesis of the year. It has been the defining thesis of the past 4 years.
I mean, I bought more Microsoft today. I'm trying to build out the position. I bought more of it.
I bought more Amazon today. I bought more Meta today. And I added a new position. And that new position was AMD that I added today.
Wait, what new position?
AMD.
My nemesis.
Your nemesis. I really took a look at the numbers.
Still a great company. It's still a great company.
Well, it didn't deserve a 30% decline from the highs, especially after beating earnings.
See how much Broadcom rallied today?
I did. I almost bought Broadcom, but I picked AMD instead. Yeah, I mean, this should be a big winner with Google spending almost $200 billion CapEx.
Yeah. I mean, think about it. Just between Alphabet and Amazon, $380 billion in 2026 of CapEx being spent. Think about it. That's larger than the GDP of countries.
Yeah.
And we want to worry about components? Stop it. Like, the market needs to get over themselves. I'm not getting off this train. I've been saying it. And I just think that we have too much access to information. and markets move on a freaking nose hair. It's crazy. Like the slimmest thing can get everybody in a panic. It's nuts. Nothing this week changed what these companies are going to produce or how AI is going to be implemented.
I want to play two clips real quick. One from Elon, one from Sam Altman, and then I want to kind of get your thoughts on this, Steve.
Thinking about the synergies between XAI and Optimus, given you were highlighting, look, you need this world model, you maybe want to use some really smart intelligence as the control plane. And so maybe Grok is like doing the slower planning, and then like the motor policy is a little lower level. Yeah, what will the sort of synergy between these things be?
Yeah, so you'd use Grok would orchestrate the behavior of the Optimus robots. So let's say you wanted to build a factory. Then Grok could organize the Optimus robots, assign them tasks to build the factory to produce whatever you want.
Don't you need to merge XAI and Tesla then? Because these things end up so.
What were we saying earlier about public company discussions?
Well, we're one more Guinness in, Elon.
So that was the clearest clip from this podcast that Elon is seriously thinking about merging all three companies. A lot of this is also contingent on this whole data center and space argument around SpaceX. This is what Sam Altman said when he was asked about orbital data centers.
Do you think space data centers will provide a meaningful amount of compute for OpenAI in the next 2 to 3 years,
No.
5 years,
No.
10 years?
You just keep going. 10,000 years.
I wish Elon luck.
Okay.
So, Steve, two questions for you. Number one, you think SpaceX and Tesla merge? Number two, you think the SpaceX data centers and space thesis, do you think it's BS?
I think they merge. I think it's part of Elon's master plan. He's always several steps ahead of everybody. There's no reason for these three companies not to merge. It would benefit him greatly, especially with how much he owns of SpaceX and how much he owns of X. So I can see that. Data centers in space. Let's really think about this. What actually has to happen for that to come true? Not saying it's not going to, but give me one sec.
I honestly, by the way, I have no freaking clue. Well, I feel like a lot needs to happen for data centers.
Sorry, I had a sneeze.
bless
I'm not
you.
saying it's not going to happen, but maybe in 15 years, 10 years, if we're lucky, you're not sending humans up there to build data centers in space. So it's going to have to be robots. There's a lot of things that have to happen before you actually get data centers built in space. It can't just be the prototypes of Optimus building it. I mean, there aren't enough people trained as astronauts, and there certainly are not astronauts trained in engineering and everything else that you need to build a data center. So the only way you do it is with robotics.
Yeah. I agree with you. I think it'll take some time, but then again, maybe Elon knows a little bit more about this stuff.
I'm sure he does. I'm sure he does. But when has Elon ever met a timeline?
That is also fair. By the way,
So-
Tanner, it's officially Anthony Noto, folks.
Yep.
It is happening at 5 p.m. in 9 minutes.
And I talked to him. He said fucking Noto was a little unhinged, and it's a great show.
Ooh.
Yeah, so very interesting.
This is going to be fun. I think a lot of us have been waiting for this moment.
Yeah.
And
I'm happy
Yeah.
to see what they say. I'm going to listen to it at some point this weekend.
yeah, I'm very happy that he got the interview as well. And I think our friend DDI might have played a role in making
I
this
mean, Hager may have hooked it up. And look, here's the big thing. I hope Hager has gotten them to change their tune about doing more interviews with people who actually understand the company instead of these analysts that know jack shit about the company. And the big thing that I would like to see is have a real investor day once a year. I wanted them to start doing that. So we'll see.
By the way, Hims is being referred to the DOJ for potential violations of federal food, drug, and cosmetics.
No, jeez.
Dude, this stock, like this company, 8% down after hours. I am so happy I got out of this shit, dude. Like, this is one of those. I am so happy I got out of it. This is just a mess.
Crazy.
Absolute freaking mess, dude. The DOJ is now investigating them. All right. Well, I think let's end off the show by introducing the podcast.
I think we should.
All right. So you want to give people the official name of it?
I think you should.
I think you should.
So why don't we each say the word that we came up with? How about that?
I think we're both a little nervous to say the name of the podcast.
I'm not nervous.
I'm a little
nervous.
nervous.
To be fair, why are you nervous?
Because we spent so long thinking about it, and like,
this is the only thing that we agreed on. By the way,
this is literally the only thing we agreed on.
This is literally the only thing we agreed on after the community gave us hundreds and hundreds and hundreds of suggestions, and we went through hundreds and hundreds, maybe even thousands of suggestions on freaking Grok, ChatGPT, and Gemini. So,
that's true. We went through a lot of thinking.
You tell me.
All right, so how about I say it and then you can give your explanation for it, and then I'll give my explanation for it. Or I can just
that's fine.
All right. Name what's the name of the podcast? PM&R bag holder. Oh my gosh, that's not a horrible name. It's not a horrible name. All right. The name of the podcast is Basis Points. That is the name of the podcast, which for those that are in the world of finance is short for BIPs. Essentially, Basis Points is showing different perspectives around the equity markets. BIPs are kind of how elite financial pros talk about the world when you're saying you're moving 50 basis points up, 50 basis points down. Welcome to Basis Points, where we discuss different perspectives, different ideas. I came up with the word, I think points. Steve came up with basis. We put it together and we're like, you know what? This is a finance term. There's two of us. Basis Points is the name of the podcast. Steve, go ahead.
Yeah, I think the way that it went down is I said, what about the basis? And then you're like, basis, how about basis points? And then we're both like, yeah, that kind of works. And I'm pretty sure that's how the conversation went.
Yeah. And it's one of those names where it kind of flowed really nicely. It's like, all right, welcome to Basis Points. And the idea of it is, you know, you're talking about the fundamental basis around something. You're talking about different points. And then it's a play on the Wall Street term, not a Wall Street term, but like a financial term that people in Wall Street use of BIPs. And usually when you say BIPs, people think you're like trying to sound smarter than you are. So it's kind of funny. And it's also about like small moves and big money. Like Nvidia moving up 50 BIPs is a small move, but it's a lot of money. So a few BIPs can mean hundreds of millions of dollars. And it works across all asset classes, crypto, macro, options, equities, rates. It's one of those universal terms that's used in finance.
And I already came up with the first t-shirt.
Really? What's the t-shirt?
For merch, you ready?
Okay.
We get a line chart, right? Or candlestick wicks, and you're rock climbing up one of them, and I'm sleigh riding down another.
Okay, we got some work to do to think about but I like the creativity.
Come on, that would be hilarious.
I like the creativity. But that's the name. That's what we got. Hopefully it grows on people. And that's what we have with Basis Points. Do we just put up the pod right now?
Yeah, I think we should. I think you should post the link to the pod. I think you should put it out. Let's make it live. And hopefully everybody watches it this weekend. It is phenomenal. And I can't believe how good it came out. And I'm excited for everybody to see it because of how good it is.
All right. This is the link. You guys got two things to watch tonight. You have Tanner's Noto interview, and then you have the first episode of Basis Points. I'm putting it right there. Choose to watch in whatever order you like.
With the legendary Josh Brown.
With the legendary Josh Brown. And then so we have the X as well. I'm going to put the X right here. This is a clip on X of Josh talking about this stuff. There's a lot of good moments from here. Yes, it'll be on Spotify. I haven't focused on Spotify for so long, but we'll put it on this. But this I thought was one of the best clips from the pod, especially given the shit that everyone's had to deal with over the past couple of weeks in regards to a bear market. So let me pull this up real quick. Let's pull this right here.
Thank you. Do you get upset if people call you a permabull?
I've been a permabull since.
God, who does he sound like when I say I don't care?
Yeah, I've been a permabull since. Listen to me. Where's my camera? Right here.
This one.
I've been a permabull since the Dow Jones was literally breaking 10,000 for the first time.
Now we're about to 50. Yeah.
And they said it was a bubble then, and it was.
And they're still going to keep saying it's a bubble.
And this is maybe a bubble now. And you know what? I'm 48 years old. Even with my own money, I'm still putting money into a 401k every year, and I'm forced to for the next 20 years. So I'm a forced buyer. Your whole audience, they're all forced buyers.
All of us.
Forced. You have no choice. You will, every 2 weeks, a portion of your portfolio will be diverted directly into the stock market, and you can't pull it out. So if you already know that your next 40 years, you're a forced buyer of stocks, wouldn't you want the market to fall? Why are you rooting for all-time highs to bail out your boomer grandparents? It makes no sense to me why young people are rooting for new highs. The worst thing for you is Dow 50,000.
So it's a fair point, but during Liberation Day, and Steve and I, we know because of our audience, people are like crying, like it's bad. But they're like 30 years old. How do you explain to someone
Keep
that's
buying,
not the worst?
shut up, stop tweeting, keep investing. That lost decade concept I just described to you, that's my actual lived experience. If it happens again and somebody spends that 10-year period of time doing nothing but adding to the market, once the market breaks out of that and goes, they will have so much more money as a result than they would if they're just buying at highs and then the market falls and they stop allocating. Disaster.
It was pretty cool. That was pretty cool. I think people will enjoy it. And it's pretty much what Steve's been saying for a while.
Yeah, I didn't get that from Josh. I've been saying it for a long time. And he's 100% correct. And it is well warranted on a day where the Dow broke 50,000 for the first time, given what we talked about on the episode. So I really think everybody will enjoy watching it. It's about, like 55 minutes or so?
Yeah, about an hour. Okay, so here's what we're going to do with Tanner. We are going to watch the first minute of his podcast on this channel, and then I want everyone, we're going to end the stream right after the first minute because I want you guys to watch it on his channel. I will link it in the description or in the chat, and everyone can leave our stream and go to his channel. And then after his Notapod, you guys can watch our pod, and hopefully it's some pretty good content for most people for the weekend. And you guys can watch it there. But I don't want to watch the whole thing on my channel because obviously it's Tanner's podcast. But let's listen to the first minute of it. This is the link to Tanner's pod with Noto that's in the chat. And yeah, then everyone can go there and we'll see what it's like. I'm proud of him, dude. We've been talking about this for a while. And it kind of came together in like a day. Like it just all happened at once and then boom. There it was. So I think this will be pretty cool. Also, Tanner said, bro, I didn't do this countdown shit. Tanner, we're watching the first minute, and then we're sending everyone to your video.
Yeah, Tanner, why'd you do this countdown shit?
Yeah, well, maybe it wasn't Tanner. I guess it was someone else who did this shit.
Wow. We're going to blame Tanner. How about that? Because he's making us late.
Of course, Tanner is making us late.
That's why he did it. He's making us late.
One thing I'll say that will probably be controversial, some of these analysts are using a different valuation for every company. They use this valuation for the company they don't like, and they use this valuation for the company they do like. If they actually use that methodology on our company, we would actually have more upside than the company they're recommending. That's crazy. And they get away with it. Not acknowledging the growth rate of one company versus the next is just idiotic.
I finally had a chance to sit down and talk with the man himself, Anthony Noto, the CEO of SoFi Technologies. As many of you know, I've been covering SoFi stock for over 4 years now. I've stuck through it as a believer through the highest of highs and the toughest of lows. From the student loan moratorium to the rapid raise in interest rates, I've always entrusted Anthony to navigate these tough waters. So getting to pick his brain directly was a massive milestone for the channel. We discussed how he views this current landscape and where he sees the company going next, and I really appreciate his level of transparency and the fact that no question was off limits whenever it came to our conversation with Anthony. So once again, a huge thank you to the entire SoFi team and for Anthony for his time, and I hope that you guys get as much value out of this conversation as I did. So please enjoy this conversation with Anthony Noto. Anthony.
All right, we're going to listen to the first 2 minutes, and then everyone can head over to Tanner's channel, and you can watch it on that channel.
Thanks for joining us. It's been a long time coming, for sure.
Well, it's my pleasure. And thank you guys for having me, but also just thank you for all the incredible work you do to help people and stay informed about our great company and provide perspectives that help people make great decisions. So very much appreciated.
Yeah, absolutely. I mean, but I want to make sure that we jump through because I have so many questions and,
Sure.
and so little time comparatively. But you guys have recently done 2 capital raises, I think a total of $3.3 billion. You recently put out a blog post today on the sort of choice between inorganic and organic growth. Can you speak to that for us?
Sure. Well, first on the capital raise, I would definitely encourage people to go to our investor relations website in our area within our website. Provides a really, I think, detailed perspective and one that will dispel many of the myths. The first thing is like our goal is to build long-term shareholder value. And there are a lot of different ways to do that. Capital is critical to all the ways that you drive shareholder value. And I know there's a fair amount.
All right, we'll end it there. This is the link to Tanner's pod. SoFi's up after hours. Tanner, you're already helping everybody.
Good job, Tanner.
Yeah, great job, man. We are proud of you. This is a big deal. It's important when any of us that are just regular people on the internet making videos get to talk to these very high-level individuals, especially the company that he's been covering for the past 5 years. It's special. It's really special. I'm really happy that Noto finally got the chance to sit down with him and Tev. I mean, him and Tevis both have been really analyzing this company for years. So
I have no doubt that they did a great job. And, you know, hopefully Noto continues to do this because I think it's well warranted. The traditional analysts that cover SoFi couldn't tell you a tenth of what half of us understand. Like, I'm so glad that this happened.
yeah, and also Tanner, you know, if people have been watching his video since the stock was like $5-6, like Tanner goes in depth. He doesn't just sit there and yell price targets. It's going to the moon. Like he really understands this company. So to see the CEO acknowledge that, I think is very, very
great.
Cool to see.
It's great.
All right, so I'm putting the link there once again. You can watch it. It's a live premiere on his channel. I will be back on Sunday for futures. Steve, when are you opening all these silver coins that you said you were going to do?
Tomorrow night. So I'm going to be live tonight with Roy and Tevis. Tomorrow night, I will be doing the Saturday night stream. We'll be doing probably the $50 at some point tomorrow night. And then I think Matt and I are going to do a stream on Sunday during the day. So.
All right. I love it. Pretty cool. Real quick, some of these super chats. Tanner finally got his interview with Noto. Yep, that interview is live. Again, my link is in the chat, or Tanner's link is in the chat to that. Jason, going to be teaching an investing basics class at my church. I'll be sure to shout you out. What areas should I focus on for you and Steve? Steve, any quick thoughts on investing basics if someone wants to teach at their church?
How to read a cash flow statement, an income statement, and a balance sheet, and what the terminology actually means.
Yeah, for me, you're talking about investing basics, like the absolute basics. I would focus on how to get people excited about being in the markets. Like actually paint the story of why owning a piece of Amazon is so important. And, you know, getting people to understand that owning equity inside of these companies that are compounding earnings, what even earnings are and what free cash flow is, what profitability, all that stuff. People got to be excited in the first place to even care about the cash flow statement. All right, cool. Tanner's link again right there. Please make sure to check it out. Congratulations to Tanner, Anthony Noto, SoFi actually going up after hours. This is great. SoFi's up 0.5%, almost $21.
Love it.
Love it. All right, thank you, everybody. We will see you guys Sunday night. Steve will be live tomorrow. He'll be live tonight as well. And yeah, congrats on a little bit of green after a rough week, but hopefully we can recover all the way going into next week. Bye, everybody. Have a good one.
Later.